Hey, everybody, we are going to talk about home builders, but not my favorites. We're going to talk about Tyler's favorite today. Tyler Crowe is joining me. Before we get into it, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from our sponsor, The Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So it's a really good environment for home builders right now, just in general. Um, Existing home inventories are near a generational low. Some people still need to buy houses. Home builders are filling that void. Home prices are very high, so home building margins are very high. And home builders can offer incentives that existing home sellers really can't, like mortgage buy downs, for example. It's just all in all, it's a really good environment. In a typical market, about 10% of home sales are new homes. Right now, it's closer to a third. So really interesting environment for home builders. And when most people think home builders, most people who watch my channel think of one certain one, which I promise not to name for this show. But when most people think home builders, they think companies like D.R. Horton, which I'm sitting in a D.R. Horton house right now. They think NVR, which is Ryan Homes. They think Lennar. Tyler prefers one of the smaller ones. Tyler has to kind of be difficult and bring a company no one's ever heard of to the table. He does that all the time. But it makes for some really interesting investment opportunities. So, Tyler, which one are you looking at?
Well, I do more than look at it.
Uh,
I think it's my largest home builder stock that I
Fair enough.
own, actually. The one that I have kept an eye on for quite some time is Green Brick Partners. Doesn't even sound like a home builder, but I kind of got attracted to it. I started looking at it, and basically, if you know the investor David Einhorn. Like there was a Bloomberg article a while ago where it was like his entire portfolio was awful except for this one company that was basically saving it, and it was Green Brick Partners. He had made an absolute killing on it. So I started digging into, okay, why is this really small kind of obscure home builder doing so well relative to the others? Because, like you said, home building right now is great. Like I've said it at other places, like your really dumb friend from college could probably run a home builder business and make some decent money, because just to give a perspective here, like the average net income margin for a home builder today is kind of what their gross margins were. I want to say like 10, 12 years ago. I know it was just coming out of the Great Recession, but the level of profitability that we're seeing in home builders right now has been incredibly high. But Greenberg in particular, and the reasons that I have been attracted to it so long, and as I've followed them, the thing that really attracts me is like their underwriting. There's a lot of investors who kind of want to talk about the idea of like optioned lots versus owned lots. NVR kind of pioneered this model of using lot options only. Some others have implemented that model, and for the most part, just about everybody in the industry today uses some portion of their land bank, their backlog of available places to build, use lot options, maybe not all of it. Green Brick, on the other hand, tends to own a significant portion of it. And the thing that management talks about with it is underwriting. And it's like, it doesn't matter as much about how you own the land, either through an option or owning it, as long as you underwrite it really well. And if you underwrite very conservatively and find the best lot options, the best lots you can find to invest in, it doesn't matter which way you actually get them. And that's really shown in Green Brick's kind of strategy as well as their financials. One of the things that they talk about a lot, they're very heavily focused, especially in the Dallas area. They don't actually sell anything under the Green Brick name. It's actually under a whole bunch of other, even smaller individual home builders. And then they just kind of use all the back end functions of Green Brick. But the ones that they have bought are mostly in the Dallas metro area. That's kind of their big market. And one of the things that they really focus on is infill areas, where this being like a little bit smaller lots than maybe like a DR Horton or a Lennar are willing to take on, because those guys want to make great big communities and make a lot of houses, make a lot of money in a spot. Green Brick can afford to take a smaller lot in a more prime location, maybe like a neighborhood with better schools, or a place where, you can maybe put in 10, 15 houses versus 50 or 60 or something like that. And in doing so, you can tend to get better pricing in the market because you're in an established neighborhood where like the pricing is a little bit more established. And sometimes infill's just a little bit more desirable. I mean, for example, I've been kind of house hunting a little bit myself, and I just happened to look up like, okay, where are some of the uh, you know new build housing communities that a lot of the companies that we talk about were doing it, and they were 20, 30 miles out of town. And that just isn't really viable for a lot of people. And it's kind of been one of the ways that Green Brick has been able to create value. And just to give an example, right now, gross margins for most home builders today are somewhere in the 20 to 27% range, right? That's not too far off. I think I'm directionally correct there. As of the most recent quarter, Green Brick Partners had a gross margin of 34%. So it goes to show like the pricing that they have, how they use their underwriting. It's been incredible, and at the same time, they don't use a lot of leverage. There's a lot of companies in this industry. You'll see a debt to equity ratio in the 40 to 50% range, maybe down into the 30s for some of the big ones. Green Brick actually has one of the cleanest balance sheets in the entire industry. I think their debt to capital as of this most recent quarter is 24%, which just means more money to the bottom line. So you kind of tie all those things together and you get a management team that just seems to be doing it better than a lot of other people in the industry. And it's the reason that I'm so interested in it and why I want to continue to own this one relative to almost anyone else in the home builder industry.
So let me ask you a couple quick questions because I'm just learning about this company myself. What types of homes do they focus on? In other words, like entry-level housing, do they do kind of a variety? Is it more of a luxury home builder?
They're much closer to the move up, kind of not the entry level stuff. Like I said, they do infill locations, so they're probably going into a little bit nicer neighborhoods where they can get some land and make it available. And they're probably going to go with a little bit higher of a clientele on their thing. I'm just going to see if I can pull up their maybe we can cut this out a little bit. I was trying to see if I could get an average selling price for the most recent quarter, but I'm
I
not
have it.
seeing
It's
it.
554,000.
Well, there you go, right there. So
I don't know anything about the Dallas market, so I don't know if that's like an entry level price or a mid range price or anything like that.
I mean, 500. Just to give a comparison, I'm thinking there's an entry level only home builder who's very heavy in Texas. It's LGI Homes.
Mm-hmm.
Their average selling price is somewhere in the 360s. So it kind of gives you a kind of a gauge of what it kind of difference in average selling price is.
Okay, I ask because everyone keeps talking about entry level is going to help solve the housing shortage, and the millennial generation's going to start buying houses more, but mid range homes tend to be more resilient in all kinds of environments because it's people who are like you said, move up homes, like people who already have a house and can roll their equity into a new home and don't have to wait till market conditions are fantastic or anything. So thanks for that overview. I find this to be a really interesting home builder. They're not a giant builder, by the way. They're just under 1,000 closings in the most recent quarter. So they're not a giant builder, and they only operate in three states: Texas, Georgia, and Florida, for the most part. But really interesting company, and I'm glad you brought it on my radar.
If you bring me on, I'll talk about this all day, baby.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.